the driver of the complexities for the Chinese economy and for Beijing and the PBOC is to dealing with the largest property construction collapse the world's seen to date. And that will take many, many years and more innovative stimulus required. So that's the core driver of the data being suboptimal over recent years. And the stimulus will have to continue to be recalibrated, targeted, innovative, and it has to be dialed up much more than what is at the moment. They have been trying a few things, and particularly with the municipals and allowing sort of credit lines and relief that's going to be targeted at the local level, which is not the norm in recent years. But taking a step back, the Chinese economy in aggregate has got some opportunities, but when you divide it all up, there's a lot of complexities and some issues to deal with. And that is why it's not an overweight for many fund managers in the Western world, because of the complexities and the issues they have to deal with. So more stimulus, more targeted stimulus, and at a grander, significant level.
Right. And so how do you see the data changing from here? Because, there is a fair amount of uncertainty when it comes to global trade and whether or not China can sustain this momentum on export growth.
Exactly. So we've all been waiting. So two parts to that. The solution is domestic demand to stimulate domestic demand in mainland China. That's clearly not been the pathway that Beijing's going down. But that would solve that when domestic demand or G&E in the national accounts, it's expanded. And that will help turn around some of that sentiment at the consumer and business level. But let's just take a step back. There's many issues on the trades. There's obviously an overcapacity. They're very well placed to continue to export EVs, and the transition narrative at a much cheaper price than anywhere else in the world, that will continue to lead to issues with the US. But there's nuances to it, of course. Chinese companies have been recalibrating in exposures into Southeast Asia, partly in Mexico as well. So they're not really removing themselves from all of the revenue stream from that. But at the end of the day, it's enough to continue this difficult sort of pathway for them to get some sustainable export growth more than what they've got. So the overcapacity and the transition will create some issues and gridlock continually with the US. Take a step back. They'll continue to engage with the Middle East, obviously Russia, South Africa, and some other economies around the world that are not trading openly with the US. So there is some upside there, but it is really complex. And the reality is domestic demand is their pathway to really good growth, but that doesn't look like it's an option at the moment. So more stimulus for mainland China and their companies are required.